so pleased to bring Ray to us today. So Ray Seeto is a business owner of Zeikin Financial Services, and he's been a mortgage broker for 5 years. He's helped many purchase their home and to invest in property, finding a lender to meet their property goals. And isn't it fantastic that we are branching out to finances now, which is such an important area of balance in our life. When our finances aren't going well, or we're worried about where we live, this is a big issue in finding balance. He believes that home ownership is challenging, but it is attainable. And he wants to be a key partner to young couples in achieving their goal of home ownership. Ray believes in giving back to the community and is involved in community engagement through his board seats and his role as treasurer with Bendigo Bank, Darling Square Community Bank Branch, and the Sydney Mechanics School of Arts. He's a practicing tax accountant, a member of the CPA Australia and MFAA. To balance his business and life, Ray is a keen photographer and videographer and is constantly learning to improve his craft and art. He is a keen runner, cyclist, and is training for his first triathlon. Wow. And his talk is called How to Get Your First Home Loan Without Ruining Your Relationship. Hi, Ray. How are you?
Hi, Kathy. It's been such a wonderful day today. The speakers here are just amazing. I feel as though, how can I add to this day? And I hope I can.
Oh, Ray, look, I love that your topic is another dimension to finding life balance, because if we are struggling to find a home, the roof over our head, and we're not fulfilling our dreams, then it's really important. And I know as a mum to young adults, I'm going to be listening really intently to your talk today because I'll be passing. And I think a couple of them, I made sure that they were listening today as well.
Yes.
So, Ray, thank you so much. I'm going to leave you now and I'll see you at the end.
Thanks, Kathy. Well, welcome everyone and hello. Today I'm giving tips on getting your first home loan. And of course, there's some people here who may have already have their home, and I hope some of these tips you can pass on to people you know and also your kids. But many first home buyers face the challenging task, as you all know, of finding an affordable home. And once they find that home they think they want, they now have to go and get a home loan to be able to buy it. And that next step is a real challenge to go to lenders, to go to someone who can say, we'll lend you $800,000, $500,000 to get that home. They have a long list of information requirements, and part of my job here is to help tell people what those information requirements are. Just give you tips, show some of the traps that you can fall into. They'll ask questions like, what's your income? How much have you saved? How long have you worked for in your job? How much do you owe? That's just a short list of questions you need to answer. And not providing the right answer to those questions could end up for you missing out on that loan, because it could get rejected because you've forgotten bits of information. So I trust that my talk today can pass on that information and share some of that knowledge and help lessen that stress and possible disappointment. It should take about 20 minutes. But before I start, I'd like to thank Kathy and the organizers of the summit. Just amazing event. To my fellow speakers, thank you for sharing your expertise and wisdom. I myself been here all day and I've just learned so much. I can't wait to learn more. Lastly, to the audience, thank you for investing your time to be with us here today. Without you, this summit could not be possible. And if you're living in a COVID lockdown, best wishes to you and please stay safe. As Kathy said, my name is Ray Seeto. I'm from Zeikin Financial Services. I've been a mortgage broker for 5 years and an accountant for over 35. My passion is to help property buyers, investors, and especially first home buyers achieve their property goals. But before I start, I'd like to just ask you 3 simple questions. I'm going to be referring to my notes and presenting slides today just to help me get some points over. And I'm sorry, I can't get over the accountant stereotype where I need to get my facts right as I'm speaking. So if that's okay, could you just put a yes in the comments? That'd be great. Now, I'm sharing tips on how to get a home loan. If you're ready to go, please say yes. Put a yes in the comments section. And at the end of my talk, is it okay if I share the next steps with you? And please say yes in the put a yes in the comments. Thanks. If there are any questions, please write them in the comment section, and I'll try and answer them as we go along. But if I can't, I'm more than happy to answer them at Q&A or take it offline. Now, as I mentioned at the start, first home buyers face a difficult challenge of not only finding an affordable home, but finding a home loan for them. How much do you need to save for deposits? How much can I borrow? Do I qualify for the first homeowner's deposit scheme? And all lenders will offer different products, and they combine interest rates, credit cards, loan terms, and there's a whole myriad of different product combinations you can look at. And so you really need your wits about you to get the home loan that's suitable for you. So who here wants to learn about getting your first home loan? If you can put a yes in the comment section, that'd be great. Fantastic. And who here wants to know about the long-term benefits of getting the right loan from you? Please put a yes in the comments. And my last question is, who here wants to take this to the next level? Please put a yes in the comments. So, why learn about getting a home loan or a first home loan? What are you going to get out of learning about mortgages? It's pretty boring hearing about interest rates, 30-year home loan terms, fixed interest terms, deposits, first homeowners grants, stamp duty. If I wasn't a mortgage broker, I'd be like going, forget it, don't want to know. But in a nutshell, it's the Australian dream of owning your own home. You want your own castle, a place to call your own. Build your wealth, not someone else's wealth. Let me show you a graph of how important the property market is to the Australian economy. Now, this absolutely blew my mind when I first saw this graph. But before I do, let me ask you if anyone knows how much Australian superannuation is worth. You pay 9.5%, 10% of your salary into a fund, and that contributes to your retirement. Do you think it's worth 900 billion? It's worth $3.1 trillion. And Australian listed shares, it's worth $2.7 trillion. And commercial real estate is worth $963 billion. But much bigger than all these three combined is the Australian real estate market. It's worth $8.4 trillion. When I first saw this, I couldn't believe how much that is worth. And it's by far the biggest asset class in Australia. The Australian economy is basically homes and apartments that people own to live in or to invest in. And home ownership is the bedrock to our economy and the greatest wealth generator that we have. And this is due to past governments valuing home ownership and property for our society and giving us tax breaks and benefits to maintain the status quo. You all know, if you buy a home, you sell the home, whatever capital gain you have, well, you only, after 12 months, you don't pay capital gains tax. So, it's a real incentive for people to go and play in the property market. But that's something that we all aspire to go down the road to. But let me tell you a quick story. I have clients who wanted to buy their own home. They have been renting for some years and wanted a health check on their finances and borrowing capacity. They all also wanted to increase their knowledge of the housing and lending markets. So over a few meetings, we discussed their needs, and I shared my knowledge of the home and lending markets. I analyzed their income and expenses, and what I found was they needed more savings to afford a deposit. And they were spending way too much to get there. What I recommended to them was, 1, create and commit to a financial budget. 2, revise their spending patterns. And 3, move back to mum and dad's to help build their savings. 6 months down the track, they have saved enough to afford a home. We have discussed which lenders and products were best suited to their situation, and I've prepared a loan application, and approval has been granted within the week. They're now on the road to home ownership, and I want to be able to help first home buyers go down that road as well. But take a moment to think about that story and think about your future and your kids' future. Do you see yourself renting or living with mum and dads for the next 5 or 10 years? Or is it for the rest of your life? I don't think so. You don't have to listen to the pundits who say that the millenniums have dined out on too much smashed avocados and they can't afford the Australian dream. It will take commitment and discipline, but it is attainable. And I hope my tips can inspire you to take those first steps to home ownership. Let me share what Franklin D. Roosevelt said about real estate. Let me quote from this. Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. Wow, okay. I've been rattling on for a little while now, and I hope my words have resonated with you. Let me know if you have any questions. I'd be, try and answer them. But so how do we get your first home loan without ruining your relationship? Is it winning the lottery or lotto? For some people, that could happen. But for most of us, we must do it ourselves. It all comes down to financial education, a plan, a budget, and your discipline to stay the course. But of course, you need more than platitudes to get that home loan. But before I start on my top tips, don't worry about taking notes, or if I run out of time, I have a free download at the end with all my tips. So let's start off with my tips. Tip number 1, go to the bank of mum and dad. If mum and dad can help with the deposit, fantastic, and congratulations. The hard yards are done. Most couples find saving a deposit the hardest task. If you can't get the full deposit from mum and dad, maybe a portion could boost at your savings and get you to a deposit sooner. However, they do need to sign a statutory declaration that the funds are a gift and will not be repaid as a loan. Top tip number 2, the interest rates. They vary from lender to lender, product to product. Check the market for the best rates, but beware of the cheapest offer, as quite often they come with a sting in the tail, which is interest rates will increase at the end of the promotional term. Rates will also vary with the type of loan. You will see principal and interest rates for different LVRs. And LVR simply means it's the loan to valuation ratio. If you want to know about that, please write a question on the comments part. There are fixed terms for 2, 3, 4 years. Also, you may not get the cheapest rate due to your specific situation. For example, if you're going to auction in 2 weeks and your lender of choice can only start assessing your application in 30 days, your choice of lender is now restricted to those lenders that can assess your application in a few days. And that may mean accepting a high interest rate so you can go to auction. But always find the loan that's suitable to you, not just the cheapest. Tip number 3, there are government grants available. You've probably all seen it. The federal government has the first homeowners deposit scheme. State governments have the grants, $10,000 grants. Each state has their own. I won't go through each and every one of them because there's a myriad of them. But demand for these grants are high, and the places are limited. Each lender or number of lenders have quotas, and you might be disappointed because they get filled very quickly. If you go to a lender and they're filled up, find another lender. There's always someone who hasn't filled their quota. But please contact me if you want more information. I'd be delighted to help. Top tip number 4, look for special offers. Quite often, banks will offer a professional package targeted at medical, law, or accountants, and they'll offer low-cost lender's mortgage insurance and other benefits. You'll need to check if you qualify. Also, there are rebates or cashbacks for first home buyers ranging from $1,000 to $3,000. Each lender has their own thing. Now, top tip number 5, declare all your debts. Quite often, people will forget to say, I've got a small buy now, pay later loan, like Afterpay or Zip. And also declare your HECS or HELP education debt. Now, all lenders expect these to be declared. They use your income to work out serviceability on all debts, including your new mortgage. And if you forget to declare all debts, this could affect your serviceability. All lenders will check your credit score and history. If they find a mismatch, they could reject your application. Tip number 6, review your credit card before you make your loan application. Credit card limits affect your borrowing capacity, not the balance owing at the end of the month. It's your limits. My tip is to reduce your limits to the bare minimum for 3 months prior to your loan application. This will help maximize your borrowing capacity. Tip number 7, review your spending habits and adjust 3 months prior to submitting your application. All lenders will require 3 months worth of spending records, your bank statements, to work out your serviceability. Showing discipline during this period will maximize your loan. You can quickly reduce your discretionary spending, such as entertaining or eating out costs if needed during this period. Okay. Tip number 8. Are we running out of time, Kathy? Tip number 8. Know your household expenditure measure. It's called a HEMS. It's a measurement of standard household expenditure based on family size and income. Lenders use this HEMS to calculate serviceability. To maximize your borrowing, keep your spending as close to HEMS as possible. Each lender will have their own standard. So if you declare over and above the HEMS standard, lenders will use that amount. So adjust your spending prior to making your application to as close to HEMS as possible. That will get you the maximum loan borrowing capacity. Tip number 9, know your legal rights. Your rights as a borrower are protected under the National Consumer Credit Protection Act of 2009. This sets out how lenders must act when they're assessing loan applications. Essentially, it means that a lender must only give a loan if it's not unsuitable for the borrower. Also, if you're using a mortgage broker, they have a duty to act in the best interests of their customer. If you feel that you have not been provided, if you haven't been provided with an unsuitable loan, and you can have your dispute resolved through the lender's dispute resolution process, or ultimately the Australian Financial Complaints Authority. And my last tip is the lender's mortgage insurance. Lender's mortgage insurance protects the lender if the loan cannot be serviced. The borrower pays for that LMI if your deposit is less than 20% of the home purchase price. This cost of LMI could be in the tens of thousands of dollars, and they add this to your mortgage, and this reduces the amount you can borrow. So the lower your deposit, the higher the LMI. Try and work out a deposit of 20%. Okay, those are my tips for helping you get a first home loan. Today, we've looked at how to find a great home loan that's right for you, maximize that loan, meet your disclosure requirements, and even touch on legal rights. If you have any questions, please put them in the comment section, and I'll try and get to them. But please tell me what tips that resonated with you. What tips you liked? What tips do you love? And if you have, well, let me finish off. Thank you for spending the time with me. I hope you found these tips valuable. It's been a pleasure. Click on the link to download a free copy of my tips. Thanks very much. Thanks, Kathy.
Mic is off. Hi, Ray. How are you? Thank you so much.
Well.
Thank you so much for those tips. There were quite a number of things in there that I didn't know, even as a home loaner, having my own loan, that I didn't understand. So I'm just looking at a question. We've got, what is an investment tip in comparison, please? So one of the Facebook users, an investment tip.
An investment tip. Try and get your the interest rates, your loans, what do they call it? It's called loan recycling. So if you have a home loan and if you want to make that into try and find another investment home and recycle your home loan into an investment loan so that you can claim the tax deduction on that interest rate that you pay.
Fantastic. Ray, I know
that's a strategy that needs a bit more fleshing out because it is quite complex.
That's a whole nother 20-minute talk, I'm sure.
Absolutely.
And I know that, Ray, you're more than happy to answer people's questions. I've popped the links into the chat and also into YouTube because we've got some people watching on YouTube as well. Thank you, everyone. You've had some thank yous, some thumbs up. And thank you, Ray, so much for joining us today. And I will see you very soon.